It's that time. It's Money Matters Monday, and we're hooking you up with some dollars and cents. Brent Wilsey, president of Wilsey Asset Management, is here with a lowdown on our economy, stock tips, all kinds of ways for us to grow our wealth.
How to make people a smart investor, right?
Right.
Yeah. So
let's first talk about what's going on in regards to our economy this week.
Very important, yeah, because before you invest, you have to know what's going on and there's fears and so forth. So on Wednesday, you have April home sales coming out, existing home sales. They're up again. They're going to be about 4,990,000, what they're going to be at, up from last month. We also have on Thursday, April new home sales, and they're up. So our economy's starting to move with more home sales. Now, one thing we have to be careful of is Wednesday, Federal Chairman Ben Bernanke speaks. He's going to testify in front of the Congress. We're talking about, the quantitative easing, what's going on with interest rates and so forth. The minutes come out from their meeting and so forth. So that could be a very volatile day on the markets. If he says the wrong things, you'll see some big sell-offs. If he says the right things, you'll see some big increases there. And on Friday, we have April durable good orders, which includes things like airplanes and refrigerators and things that last longer than a year. That's going to be a big report as well. So some good things going on there, but you got to watch them closely because they could be market moving, so don't act emotionally, act by what's really going on with the data.
I feel like a lot of people are spending money right now.
Yes, oh, they really are. It's amazing. So I think it's going to be good news, but again, watch it closely.
Okay.
We want to talk about how to make people smarter investors and so forth, and there's a lot of myths out there about the stock market, and so I listed 5 here to try to help people out.
Okay.
And the one that really gets me is people say, oh, and buying stocks is like, gambling. And it's the farthest thing from the truth, because when you go gambling, you get a chip that you pay $5 for, you get a gambling chip. When you buy a stock, you actually get a piece or a fractional ownership of a company that has assets, liabilities, equity, profits, and so forth. So you actually own something. So it's not gambling at all. When you invest in the stock market, it is not gambling. Don't think it's gambling. A lot of people think the stock market is for the rich only. Well, that's not true either. And it used to be that way back in the good old days with the old boys and so forth. Now, investors have all this information is available to them via the internet. They get a lot of stuff via the internet, so they can almost get the same information that the Wall Street guys get back in New York. But they have to know how to do that, and the benefit they have is, unlike the big guys, is the big guys, they got each quarter, how they do, and so forth. As a small investor, you can actually look at buying a company today and not worry about it for a year, 2 years down the road.
Unless they go bankrupt, like the 2 companies I invested in.
Well, you see that will bring me to the next one.
Okay. God, talk about 30,000 gone like that.
Yeah. Well, you got to watch out. You got to kind of know what you're doing. That's actually number 5. But number 3, this is a big mistake investors make. They think what goes down will go back up. And they believe that a stock that went from 50 to 10 is a better buy than a stock that went from 5 to 10, because I think they see value there. And what they have to do is what you didn't do is
assume the risk. I mean, like adjust the risk and do your research, right?
Do your research. Look at the financial statements of the company. Is the company increasing profits? Do they have a lot of debt? There are problems with that company. So that's what you have to do, is look at the company saying, it did go down for a reason, but people think, it's going to go back up. And go ahead.
Let's do our stock tip, because we have to go to breaking news out of Oklahoma, and I want to make sure we have it.
All right. Well, we know this company, Aflac, with a duck. You know what Aflac stands for?
No.
American Family Life Assurance Company.
Wow.
Yeah, so that's what it stands for. They're known for short-term disability plans, also sell dental, vision, and so forth. Their sales are up 9% year over year. Earnings climbed 27% again. See, these are companies.
I like the duck. I think they're creative.
But don't
they know marketing. Well, I look at the company. They have smart marketing.
Yes.
If you don't have smart marketing, forget it.
And that's part of it. And that could be why their sales are up, earnings are up, because we all know the duck. But I look at things too. The net profit margin, they make almost 12 cents every dollar they bring in.
Yeah.
Their PEG ratio is 1.27. Earnings for December 2014, again, they have earnings, $6.51. You put a multiple of 16.5 earnings on that, which I'll explain another time what that means.
Yeah, next time you're here, you got to explain that.
Yes. A stock price of 107, up about 90%, and the company pays a 2.5% dividend. So I think Aflac's a pretty good company to put in your portfolio as an insurance company. Diversify that portfolio.
I love it.
You like it?
Can we talk hedge funds sometime?
We can talk hedge funds next time.
Okay, let's do that.
Alrighty.
All right, thank you. See you next Monday.
Next Monday I'll be here.